I'm going to talk about qualified joint ventures today. There's many husband and wife teams these days that maybe don't want to file a partnership tax return, which many do though. File Form 1065 and each receive a K-1. Now, after 2006, husbands and wives can elect what's called a qualified joint venture, and they would qualify for this as long as they haven't registered with the state as a partnership or a limited liability company. Uh, Mere joint ownership of property that is not trade or business does not qualify a couple for a qualified joint venture. So, in other words, one owns a property jointly. Uh, it doesn't necessarily mean that they'll file a trade or business. It could be a rental property, which would be Schedule E for other income. There are three requirements for a qualified joint venture. The first is the only members are the husband and wife. The second is both spouses materially participate in the activity. That's more than 500 hours in a year, according to Section 469. Both spouses elect not to be treated as a partnership. If the IRS sends a notice saying, "Why are you not filing a partnership return?" you can call them or write them saying that you filed as a qualified joint venture. They'll check it out. Spouses with real estate, rental, business income who are not otherwise subject to self-employment tax should enter exempt QJV on line 58 on Form 1040 and not file Schedule SE. Once the election is made, it can be revoked only with permission from the IRS. The election remains in effect as long as the spouses filing as a qualified joint venture continue to meet the requirements. If they don't meet the requirements in a given year, a new election is necessary for any subsequent year in which they do meet the requirements again.